Alright traders, I am back again with another video, and today we are holding our Ichimoku Live Forex Market Open webinar session, which starts today at 5 p.m. So what I'm going to do is quickly take you through a couple of the pairs that we're going to be looking at. We go through the whole Forex market and we discuss the opportunities for the upcoming week, if there are any. So last week when we held our session, we had the market right here at this point, and we were prepared for a Kumo breakout. But you can see back here we also got a bounce off of this Tinkinson level, off of the Kijinsen level. So we had a trade back here that we took off of the Kijinsen level, and then we also had the opportunity for another trade here as the market was inside the TK zone. So price broke outside of the zone, but not only did it break outside of the zone, it broke outside of the Kumo cloud. So we had a Kumo cloud breakout here, and we had an opportunity for a trade here. But we talked about this opportunity in our live session, which was held Sunday, and then 2 days later the market breaks above that level. Traders were prepared for this trading opportunity and did not miss this opportunity because they were at the live session and were able to catch this session, to catch this trading opportunity. So what the sessions do for members, it helps you to basically we go through all the markets, every pair, and then when you look at these pairs, when there's opportunities, we're letting you know ahead of time where these opportunities lie, and once those opportunities come into play, you're able to get into the trade because you understand the way that we enter the markets. I encourage members to use price alerts, because once I tell you a level and where the market's going to, where we're looking to take our trade, if you put an alert there, you'll be alerted as to when these trades break through. Now, since I'm basically like I'm a swing trader, so trade a little bit longer term, these trades don't happen right away, so therefore I encourage members to definitely use price alerts or they will miss the opportunities. But this is one of the opportunities that we talked about last week, and you can see what happened with it now. So let's go to the Aussie New Zealand dollar. So this is an opportunity that we're going to be looking at today. Basically, you could see here the market was in a downtrend. All right. So when we look at the Aussie New Zealand dollar today, the market was in a downtrend. You had a change of direction here when you got a TK crossover. The market broke above Kijinsen. So all the signs are bullish for the Aussie New Zealand dollar on the daily time frame. Now you're just getting your twist here. So there's a couple ways to enter a market like this. First of all, we boxed this market in because this market was consolidation and we just traded to break a consolidation. Also, we were bouncing on the Tinkinson here. All right, so you could have looked at that. But now the other thing that we look at when we're sitting at this level here and we're inside this consolidation, we get that angulation from Kijinsen. That's a strong sign to enter the market. So that's where you would enter the market, stop loss below the range level there, the consolidation level, and then we look for this market to break higher. Now there's a lot of ways to set your targets, but one of the best ways is to just go to your left and find prior support and resistance levels and just see if the market could get through those levels. So that would be one for you. I definitely would mark this level up here. All right, so that would be another level. As you can see, that cloud is a strong resistance level. So the market may come up to that level. And then you could also have your measured move, which would be another opportunity to find your target. So we talk about the measured move often, and watch some of my videos. You probably see me talk about it a lot. But I just follow the trade up to my left, watching support and resistance levels, and also looking at my measured move total target. And then that's where I would shoot for that entry. Now when we for that exit. But now when we talked about this, you had the TK crossover here, all right, and your future's just turning bright. So on the market open, I believe this market will be bright due to the close here. Probably should be bright already, and you have all bullish signals, and we want to catch this trade before the extension, because I think once you get too far above this cloud here, you're going to get an extension, you're going to get a pullback, because you're going to be looking at an N wave. When you look at an N wave, you're going to be looking at that 1-to-1 ratio, which is that measured move. When the market moves that measured move, you can expect a pullback. So a lot of times traders are telling me, you know, traders that don't know how to trade the market, or who are new to the market, or don't understand the market structure, they're getting in these moves near the end of a measured move. You know, they're waiting. Sometimes traders may take this breakout here, and then the measured move maybe is at a couple pips higher than the breakout. So they wonder why they lose the trade, and the reason that you're losing the trade is because where you're entering the trade is not a good entry. All right, so it's location, 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 location. Where you're entering that market is the problem. You have the direction, but you don't have the location. So therefore, that's how we trade when we trade here with FX at One Glance. We do level. Level is the main thing because that's your location level, signal and trigger, and then you're into a trade. All right, but looking at this, I think we have an opportunity here. I want to really see what the market yields us, but I can see we have this angulation. I would feel safe with the trade because we have support based off of the this level here, and if the market does fall back into this consolidation level, I think we still have that support structure. I mean, overall the structure of the market has changed basically, and you got Chiku span above Tenkan-sen and Kijun-sen, and it's above the price. You may find issues when we get up to this level here, but I think you have a little way to go if we get into the market today. That's what we're looking at with the Aussie New Zealand dollar. I think you have a pretty good chance here. Now, we also had this Tenkan-sen bounce that we had, and we're already in the market. So some traders were already in the market. Other traders are waiting for this violation of this consolidation here. Plus, you got a TK crossover. Now, there's another trade and opportunity that you could just look at. Once you get that Kumo twist, all right, that's a Kumo twist entry where you could enter the market. Now, some traders will enter on the TK crossover. All right, some traders will enter on the Chiku span breakout. Some traders will enter on a Kumo breakout. So the Chiku span breakout is also a Chiku span Kumo breakout. So you enter on that. You also enter on the Chiku span breakout, which would be above price. There's so many other opportunities and ways to enter the market, and then this Kumo twist entry is when you get that twist, then you enter the market at that level. But this calls for a bigger stop loss, and it's more like a much longer term trading. You have to really be able to absorb some drawdown, and I believe you have to have the bigger stop losses. But you put your stop loss based on structure, and if you can't afford that structural stop loss, then you can't take this kind of a trade anyway. At least that's why I like to take trades at levels, because I have something to back me up. If I take a trade any old place, more than likely the market can fall back down to a level where it finds support, and if you're too far from support or resistance, whichever way you're trading, then that's what gets you in that drawdown, and more than likely you get out of the trade. The market finds support, and then it goes the way you thought it would. So your location is probably bad on some of these entries that you're trying to enter, where traders are telling me they're losing some of these trades, and the way they're telling me when they're getting into the trade, it's most definitely an extension problem, because you could see that the market is out of equilibrium. You don't want to get in a market that's far from equilibrium. All right, when you got disequilibrium, you do not want to be in that market, entering that market at that point. You want to wait for the market to become more back to equilibrium and then get into the market. All right. Okay, so that's what we'll be looking at today, the Aussie New Zealand dollar. Let's go to the CAD Swiss franc. So this CAD Swiss franc, I posted this on YouTube I guess it was April 10th, it looks like. I posted this on April 10th. Currently, this is at 187 pip profit. I told you this was a Kumo breakout. So you could see this breakout. When we had this Kumo breakout, you could see what the market gave you. All right, now you probably would have got out somewhere in here as the market dropped. But if you understood the market structure, you would have still been able to stay into this trade, because everything was bullish on Ichimoku, and this is the start, like the current pair we just looked at, the Aussie New Zealand dollar. You're starting to get your twist here. You just broke above Chiku's, your Chiku span just broke above Tenkan-sen and Kijun-sen and price. You got your TK crossover, so everything's developing into something more like this, but instead you're not out of the clouds yet. Here we broke out of the cloud. I talked about this trade, giving you an opportunity to move higher still. Now it's just a matter of managing the trade, but more than likely you're going to see that trade get up into this level here at about this 52-week high at 0.78666, all the way up possibly to 0.79556. All right, but if you're not in that trade, it's too late. And then also, when the market violated, I didn't take this trade, but I posted this trade even on YouTube for everyone to check if you wanted it. But I already had opportunities in the market that I was looking at and was already in some trades. But then you could also see when the market pulled back, this is how we get into the trade again. So we look to get into the trade. Why? Because the market was at one of our levels, our locations. We were inside the TK zone. So we kind of know what to look for once we're inside that TK zone. Once the market came inside that TK zone, opportunity right there. All right. So you're looking for the market to come to these levels, and that's where you're making your decision. You're not making the decision just because you see the market moving. You really don't want to be making the decision when the market's extended. Like I said, you want to make the decision when the market corrects itself, and that's where we want to try to get into the market. A lot of locations that we know that the market's going to come back to correct itself, and a lot of signs that it gives you. All right. And then you go with that one-to-one move, that measured move that helps you find your target, so you know how far that market may go. And that's how you look at your targets, and you look at support and resistance levels. All right. So I already posted this for YouTubers and traders that trade and look at YouTube. Now I'm going to show you our last opportunity that we may be looking at today, which will be our CAD yen. So CAD yen, let me see something here. I like to use divergence, and there's not any bearish divergence. We got strength in the market still. So these are like the beginning of trends here, because the market was coming down. Look at the big picture here, and it was sideways. You could see the support level. We bounced off. Now we bounced off again, and you could see what happened after we bounced here, how far the market went. So we bounced here, getting a correction, and maybe to the move to the upside again. Now what I'm looking at here is, I'm going to show you the measured move, but I'm going to show you first of all, we're inside the cloud here, and we're rejecting this level here. Now everything is flat. To me, I'm waiting for, now the best trade for me probably would just be the Kumo breakout. All right. Now I want to see where the market opens. If it opens a little lower than this level, just put an entry up above this, right up this level, and let the market trigger you in. Okay. So we need to see where it opens today. That's going to help us to decide how we want to handle this. But you can see we're flat Kijinsen, right? Big thing is just wait for that first angulation, and you take that trade to the upside. Now Chiku span is going to find some resistance at the cloud here, a little bit thick cloud depending on where the market comes through, but you got all bullish signals. TK crossover bullish, futures bullish, Chiku span is bullish above price, and Tengen-sen and Kijinsen, and then finally price will be breaking outside of the cloud. That will be your last bullish sign for you to take the trade. Overall target, if you can hang on that long, would be back up at the 52-week high. But if you can't, then just look for these previous, and plus you know the market's gonna retrace, right? So you know the market's gonna correct itself. So this is a level where we look for target. At least we want to get through that flat cloud. All right, and then we would probably move to the next levels, and I like to use even the flat Kijinsen. Sometime you put that at a support and resistance level, so you can see these flat levels. So just move to your left to look for the target. But then lastly, but and not leastly, is the measured move. So everyone, a lot of traders probably know the measured move, and I'm going to go from the very bottom here to this point, to this point. So the target here, the first target is going to be at this level here at 89.063 to 89.437. That's our zone, our first zone. Then overall the next level is going to be at 90.570, and then ultimately at 92.570. I believe we could see it go a little bit above this 90.570. Maybe once we break, we get this 1-to-1 ratio here, which will be your measured move. You get up into this area, you may see it correct itself and then go back and attack this level. Now this is long-term trade, and if you can't hang with the long-term trade, because this was a long-term trade, if you can look at the market moving that way, sometime you see the market correct itself and you get out. If you're trading with more than one lot, you could do a lot of things. So depending on how many lots you're using, you're going to be able to definitely take some profit and let some run, right? But these are the things that we look at in our sessions every week. So you already know ahead of time, like if the market is at this level here and we're talking about waiting for a Kumo breakout, you could see that happen. Now the market pulled back. All right, and I like to see this level to compare to this level as far as what we have divergence, and we don't have any divergence, so there's still strength in this move to the upside. And even if there was divergence, I don't trade divergence, and divergence doesn't always take effect right off the bat. A lot of times divergence is going to take effect at a support and resistance level. All right, so looking at this week coming up, probably soon here we're going to see probably a breakout of this level. All right, because you got a rejection here and you're going to see the break above that level. You're inside the TK zone. Trade outside that zone, you're good to go. All right, because you're going to be outside the zone, outside the cloud, and that'll trigger that trade to the upside. So that's what you get when you're a member at FX at One Glance. We do this every week. We do this every market open for Forex. And then for cryptocurrencies, we just do it as needed. When I look at the markets and see things happening, we just have a live session anytime during the week. And then sometime during the week, we'll have a live session for Forex. And then sometime we'll just do stocks. All right, so stocks and ETFs. Yes, we're doing all that stuff because basically we're trading all that stuff and letting you know that Ichimoku works for all that stuff. Now, definitely not just trading Ichimoku though. Also trading just price action, fractals, support and resistance, and then also trading different indicators that I'm using as far as like Williams %R and the RSI, ultimate oscillator, OBV, like you see here on balance volume. Trading those types of indicators. Don't trade a lot of indicators, but usually when I'm using them, I'm looking for divergence or momentum again. So just like the RSI, people think that you can't use the RSI when the market is ranging. All right, but you can. There's a lot of ways to trade with the RSI. One of the good ways that I like to trade with the RSI, and I'm not going to put it on here. I think I have one on YouTube already. But when the market's trending to the downside or upside, you get that correction where it pulls back. Well, the RSI usually will pull back to a certain level, to the mid-level, and then once you see that pullback, it shows you that move and that bounce off of that mid-level. So then that's where you want to enter your trade, enter your target, your trade to the upside or downside. All right. So there's a lot of ways to trade and a lot of things that we do. Yes, I'm an Ichimoku trader, but sometimes you have to trade other things. Moving averages are just one of my all-time favorites. So also trade moving averages. I like to use the 21 period moving average, 50 period moving average, 100 period moving average, and 200 period moving average to trade the markets, especially the stock markets. Okay. So basically, guys, if you become a member, you get a chance to do all that stuff with us. So I want to just show you what you get with that. But here's the things that we're going to be looking at for this upcoming week. Okay, so as I stated, today we're going to be having our Ichimoku Market Open webinar session at 5 p.m. today. This is a member session. But if you want to become a member, you can become a one-year elite member. What that offers you is an opportunity to attend those those sessions as stated, and the video recordings and all the archives from past sessions. So if you become a member, you get all those. You get the sessions where we have Forex, cryptocurrencies, stocks. It doesn't really matter. If you're a member, you get everything that I do, all my content. We have these sessions a few times a week, depending on what the markets are doing, but we have the open session mostly every Sunday, depending on if I have other plans, such as family things, but we usually have these, but also when football season's in, we don't have them too much. So you could get that membership, 1 year elite membership for $250 for 1 year membership. So you get access to all the courses for 1 year. All right, so all the new courses, all the old courses, anything that is developed within that 1 year time frame. And it's not a recurring membership. It's just you pay that one-time $250 fee and you have access for 1 year from the date that you purchase the membership. And that membership will give you access to all those courses. It'll give you access to the webinar sessions. It'll give you access to the archived webinar session recordings. It'll give you access to videos that I post that I don't post on YouTube. It'll give you access to trade setups that I post. It'll give you access to the forum. It'll give you access to the chat room. And for $250 for 1 year, that's a lot of access. All right, so you could become a member. All you have to do is visit us at fxatOneglance.com, and on that home page it tells you how to become a member. If you're interested in that, there's your opportunity. All right, guys. So once again, visit us at www.fxatOneglance.com and take that opportunity to become a member. And until next time, have a great one. God bless. So long.